Another Wednesday, another weekly Wednesday webinar. Good evening, everybody. Welcome to your favorite evening of the week. Thank you so much for joining us. My name is Eddie Villanueva. I'm your official MC for the weekly Wednesday webinars, and we're so glad that you're here. Thank you so much for making time out of your busy schedules. We know that we got life going on, we got work, we got families, a lot of things. But you have decided to be here with us and join us in a new topic. So thank you so much. Your support means so much to me. And as you can see, it's a very relevant and important topic that we're going to learn from today, which is smart tax season moves, refunds, payments, and scam awareness. What are you gonna do with your refund? If you get a little refund, maybe Uncle Sam was nice enough to be like, you know what, Carrie, you might get a little bit be back, So, what are you gonna do? Are you gonna save it? Are you gonna invest it? Are you gonna spend it? So, stay with us. We're gonna give you some tips as to what to do with that money. Maybe you wanna make some payments, maybe you wanna invest it, like I said. And of course, be alert for all those scam traps because this is the hot season of taxes. Scammers want to take advantage of that money that you're getting or that you need to pay. So please make sure that you are aware of those, those things, those red flags. And if a gut feeling tells you like this doesn't seem right, please make sure that you do due diligence to make sure that you are protecting yourself. And of course, here at the United States Senate Federal Credit Union, your security and your confidence when you're making those financial decisions is our top priority. So once again, thank you so much for being here with us, and shout outs to all the attendees on the list. Thank you so much for being here. I see that MJ is back. Thank you so much for being here. I know last time you told us how long your membership has been with us. So MJ, thank you so much for your membership. We appreciate you. Also, one of our, our friends, somebody that you can consider like part of the panelist team unofficially. Mr. Ken. Mr. Ken is here from the West Coast. Thank you so much for being here, sir. We appreciate you so much. And, as usually I always tell people, tell somebody to join you, send them the link. We're still starting early, but we want to make sure that everybody takes advantage of these free, that's right, free workshops that we have for you. And everything is created organically as well. So please share the wealth with everybody. Maybe somebody can learn something new this evening. All right, 6:02. They only pay me 2 minutes to do the AMC. So, once again, welcome for being here. And I want to pass it on to my colleague from the marketing department, Andrea Londono, which will be doing the official introductions. Ms. Londono, take it away from me.
Hey Eddie, thank you so much. And the the man who introduced you to the webinar tonight is Eddie, the man, the myth, the legend. And also a part of the marketing team, the queen of content creation, and and who we have to thank for all of these presentations that you see every Wednesday is Miss Carrie. And then we have the presenter for tonight, the one and only Milton, who is a part of our membership development team. He is the head of membership development. So take it away, Milton. Floor is yours.
Awesome. Thank you so much, Andrea. And look, you did amazing. So that, by the way, for everyone, if you may or may not know, but that was Andrea's first time doing the intros, and she did amazing. So she always gives herself a hard time, but that was great. So appreciate you. And again, as always, welcome everyone. We're so happy and excited to have you with us another in another weekly Wednesday webinar. We know that you have a lot going on, and then again, we want to thank you for making time to be with us on another weekly Wednesday webinar. So with that being said, um, what we're going to talk about tax season, and it is the season, by the way. So we know what tax season can bring a lot of a mix of emotions for many, whether it's anticipation, stress, confusion, sometimes even relief. So today we're going to approach it in a practical standpoint, if you will. So we're going to talk about, what can you do if you're getting a refund? What are some of the options if you have balances? And how to respond strategically to your personal outcome, how to protect yourself from scams that like Eddie mentioned, this is the season that a lot of scammers are pretty much on high alert, trying to find the loopholes on how they can get to you. So long story short, the goal for today is to give you clarity and confidence. When you understand what's happening and why, tax season becomes much, much, much more manageable. So let's start by setting the expectations for what we're going to cover tonight, and and then we'll go ahead and dive into this presentation for this evening. So again, we have three areas that we're going to be focusing. The first one is understanding the common tax outcomes again, why some people receive refunds and why others, like me, have a balance. Second, smart ways to use a refund or manage a balance responsibly. And last but not least is going to be protecting yourself from the tax season scams. What we are not doing today, and again, I want to make this very clear, is providing any individual tax advice or walk you through how to file or prepare your return. Every situation is different, and a specific filing question should always be directed to a qualified tax professional. With that foundation set, let's talk about why tax outcomes vary in the first place. So, no tax situation are the same. What do we mean with that? That means that your outcome depends on your income, how much was withheld during the year, whether you're experiencing life changes like marriage, you got married, divorce, perhaps you welcome a new child to the family, or whether you had multiple jobs, or even whether or not you have multiple self sources of income, such as having additional employments, more than one employment, or even investment income, which I know some of you had to make sure that you report those when you're doing your taxes. So, and let me give you an example here because you could easily have two people earning the same salaries and they both can have very different tax results. That's why comparison is rarely helpful. So do not try to compare yourself with others because, again, everyone is in a unique situation, especially when it comes to taxes. With that in mind, let's simplify tax season down to its two basic outcomes. So refund versus balance due. So when you file your return, you are reconciling pretty much what you pay during the entire year. And with that, you also, that's how you also going to determine whether you have a balance or you are owed a refund. So there are only two possible outcomes. So again, you either pay more than what was required, or, and I'm sorry, whether you pay more and then you're going to receive a refund, or you pay less than required and now you have a balance. Either way, everything either way where you stand is completely normal, so neither is good or bad. They simply reflect how your taxes were paid throughout the year. So before we talk about a strategy, let's look at some context. If you haven't filed your taxes yet, this is a good moment to pause before submitting. Even having a general sense of whether you're trending towards a refund or perhaps you have a balance can make a huge difference because this is going to allow you to prepare mentally and financially instead of being caught off guard. There are reputable online calculators available that can help you estimate whether you are likely to receive a refund or owe a balance. One of the links that we will highly recommend is going to be the link that the IRS provides on their website. This link is going to offer you an estimate, a withholding estimator that, again, can help you understand and give you a projection as to where you stand. Are you gonna be on the refund side, or are you gonna be on having a balance and then you're gonna have to pay that back? Again, wherever you fall, this particular This particular estimator is going to give you a clear understanding as to where you are. And remember, the key point here in the tool itself is to give you the awareness that you need. So whether you understand your likely outcome, you can respond strategically instead of reactively, which is very, very important. And I'm going to ask perhaps, Carrie, if you can share the link with everyone, the link directly to the IRS, which is irs.gov / individual tax withholding estimator. This is a great link. Again, if you haven't filed your taxes yet, I'll highly recommend that you go in and that's going to give you again can give you a clear picture as to where you might be when it comes to your taxes for 2025. Now, let's talk a little bit about numbers. As of early 2026, the average federal tax refund for 2025 filing season is approximately 3,167. That figure comes from directly from the IRS filing statistics. It represents an average across millions of returns of the people that have already filed, believe it or not. Some people will receive more, while some are going to receive less. And if you're like me, probably you won't get anything. Again, this number is not a target, it simply provides context. With that context in mind, let's break down why refunds happen. So if you receive a refund when you pay more in taxes during the year than you ultimately owed, this normally happens when too much was withheld from your paycheck. It can also happen when tax credits or deductions reduce your total tax liability. So a refund is not bonus money. It is a reconciliation of a overpayment that you did throughout the year. So So with that being said, give me 1 second here. So if that was the outcome, then what happens to the other? Again, if you owe a balance when you pay less in taxes than you ultimately owe, right? So I mean, it really it's pretty simple. You pay too much, or you didn't, or you didn't have enough credits. So now you're going to be either in one of the different buckets. So again, if you owe, this happens if not enough was withheld, or if you have multiple income sources, or if you earn self-employment income. If you are in that boat, normally self-employment, unless you're paying taxes every quarter, most people will wait until the end of the year, and that's when you will be responsible for paying your taxes at the end of the year, because taxes are not withheld automatically. So again, this is not a failure. If you're in this boat, again, it's just a timing issue. So, and now that we understand the why behind each outcome, let's talk strategy. So, if you receive a refund, it's going to create flexibility for many. So, how you use the refund can strengthen your financial picture. Intentional choices matter, and this is why we're having this webinar. Because before spending it quickly, pause and think about what will create the biggest long-term benefit for you, and if you're married, for your whole family. So let's start with a financial priority list first. So when deciding how to use a refund, start with impact. Paying down high interest debt reduces future interest costs right away, or building or boosting emergency savings is going to increase that stability that many of us perhaps need. Ideally, households aim for 3 to 6 months of essential expenses, though building even 1 month is meaningful progress if you haven't started yet. So then think long term. Retirement contributions, whether to an IRA or employer sponsored plan, can offer tax advantages and long term growth. That is something that you might want to explore. Beyond immediate priorities, refunds can also support growth. All right. So, with that being said, a refund can support professional development, education savings, or strategic home improvements. If eligible, contributing to a health savings account provides unique tax advantages, and if your employer offers you that option, I would highly recommend that you take advantage of that. The reason why I say that is because contributing to those type of accounts is going to provide those tax deductible and growth is tax free. So whenever you make any withdrawals from those type of accounts, it's gonna is it automatically triggers qualified medical expenses that again that are tax free. So check into this type of options that you might be able to do that will help you with those taxes at the end of the year. And also, this is a moment, to align short-term cash with long-term goals. So that lead us to thinking beyond just filing for this particular season. So again, have a clear picture as to what you're going to do. Once you know exactly how much you're going to be receiving, create a plan, have something, have a roadmap, if you will. For those that are believers in a budget, a financial budget like me, once you know that you have a specific dollar amount that is coming into your account, create a plan, because once a plan is established, that clarity that is going to give you as to what you want to do with your finances is going to play a huge and key role in achieving those goals that you want to set for those refunds that you're going to be getting. So again, be very wise and smart when it comes to having a plan in place if you are going to be on this side, which is receiving a refund for your taxes. Now, when you receive a refund, again, think in terms of both short-term and long-term financial health. So you have two different options. So balance immediate obligations with future goals. I'm sorry here that my computer is jumping too many slides ahead of myself here. So my apologies on that. So again, going back to what I was saying, to balance immediate obligations with future goals. So using a refund intentionally can strengthen your financial foundation. So with that being said, let's focus on the other scenario, which is what, again, I want to use myself as an example, but this is where I am. This is where I fall. So if you overbalance, you're not alone. Millions of taxpayers owe each year. So again, if you are in this particular bucket, welcome to the club. The key again here is addressing it early. Early action gives you more options and typically reduces stress. So let's look at what those options might include if you happen to be here. So, if possible, paying in full, avoid any interest and penalties that the IRS might implement. If if that's not possible, the IRS and most state tax agencies, they offer payment plans that can assist you with taking care of the balance that you owe. Some individuals consider borrowing as another option. But before making any decision, it is important to understand what borrowing can actually mean in this context. So very important to keep that in mind. Because remember, if you're going to think about borrowing, that is in essence is going to change how a tax bill is paid. It does not eliminate the obligation. You are replacing a tax bill with a loan or a credit product. So that means that there's going to be an interest rate, a repayment term, and total cost that is going to come into the picture. So, for example, some people use credit cards to pay a tax balance. That obviously can work for certain people, but just keep in mind that the national average right now for credit card interest rate is going to be in the mid to high 20s when we talk about interest rates. So if you want to use a credit card and your interest rate is going to be in the mid to high 20% interest rate, that balance can easily increase and very quickly become a lot more than what you wanted to, that you wanted to face. So again, be very mindful if you're thinking about using a credit card to pay that tax bill. Other people may explore a fixed rate personal loan. Fixed payment and a defined payoff timeline can offer more predictability. And as a credit union like us here at the United States Senate Federal Credit Unions, members may also compare options such as a personal loan or a lower rate credit product, which are often priced more competitive than most financial large institutions out there. Again, the key is not whether borrowing is good or bad. The key is cost and fit. So before making that decision, there is an important question to ask. First, what is the total cost over time? That includes interest and any origination or balance transfer fees. Second, does the monthly payment realistically fit into your cash flow without creating a strain elsewhere? And third, how does this option compare to other alternates? So, for example, how does the structure of a loan compares to a high interest revolving credit card balance? Or how does it compare to an IRS payment plan, which also carries interest and penalties? So you have to think about all the different scenarios and what is the best option that you can go, that will give you that the relief that you need when it comes to paying your balances when back to what I like to say, Uncle Sam. So keep in mind there is more than one way to pay a tax balance. Compare total costs over time, the interest rate, the fees, and flexibility. Our advice is to try to avoid high interest solutions that create long-term strain. So again, if you're going to use a credit card, unless you have a special introduction rate, which I know some credit card companies will do, where they will give you 0% for X number of months. So if you think that you can use that as an option, go for it. But be very careful. Make sure you read the fine print, because oftentimes credit card companies will penalize you even if you are placed on a 0% interest rate for a X number of months. For instance, I know, and this is again, I have heard from members directly that have had a situation like this happen to them, where they took out a credit card, they were given 0% for 18 months, but something happened along the way. They miss a payment, and not only were they penalized for missing the payment, but also the special promotion rates got taken away, and now they were facing a much higher monthly payments than they had anticipated. So again, be very careful when choosing the options on how you want to repay. And don't forget, the goal is minimizing overall costs and protecting your financial stability. And ideally, we want to reduce the chances of repeating this scenario next year. And what do we mean with that? Small adjustments during the year can prevent big surprises. So our advice is again is to review and adjust withholdings if necessary. Plan for income without withholding, such as freelance or investment income, perhaps. Use credits and deductions and be very strategic when you're doing that. Also, contribute to tax advantage accounts when appropriate to potentially reduce taxable income. And most important, planning ahead is going to create the productivity, the pre predictable outcome at the end of the year. So my apologies, I'm getting stuck. With that being said, as we talk about payments and refunds, there is another important topic that we must address, and this is the one that everyone needs to be aware, and that is the tax season scams. So tax season is also a prime time for scams, like I stated at the beginning of the year. When money, deadline, and official looking communications intersect, scammers, they pay attention to that. So let's talk about why this time of the year, in particular, it is their most attractive season for the scammers and how they can try to make you fall and become a victim of a scam that can easily get you into a lot of trouble. So and it's pretty normal during this time of the during this time of year that a lot of people they expect to receive messages about refunds and payments. I think everyone you'll probably see a lot of commercial, a lot of ads on TV, social media, you name it. And if you start receiving those messages, some of those messages can include a lot of deadlines that create urgency. Some of those messages can look very convincing. That combination makes tax season attractive to all these criminals. So, how do you recognize them? That's a great question. We always tell everyone, please be cautious of unexpected tax-related messages. Urgent or threatening language is a major warning sign. That would be your first red flag. Promises of unusual large refunds or secret credit should raise concerns. Demand for immediate payments that's going to be again another red flag. So understanding these warning signs is going to make it easy for you to pause, and that's what everyone should do. Pause, pause, and just take a second or two to look into those type of messages that you receive, whether it's through your phone, emails, or even getting phone calls. Keep in mind, and this is very important for everyone to be aware, the IRS does not initiate contact through unexpected text messages or direct social media messages. Also, the IRS does not demand immediate payment without a written notice. And the IRS never requests payment via gift cards, wire transfers, or cryptocurrency. So if you're getting a call, a message, or an email saying, "Hey, we need your payment. If not, we're gonna send the sheriff's office, and then you will be placed under arrest, unless you send us a payment, and the form that we want you for you to send a payment will be using cryptocurrency, or send us a wire transfer, or perhaps go to your nearest Walmart and buy a bunch of gift cards and send us those gift card codes." So the IRS, again, will never do that. And why do we talk about this? Believe it or not, a lot of people fall for it. And they actually use this type of methods to send those payments and thinking that they already took care of all the taxes that they owe to the IRS. So if anyone reaches out to you again with this type of demands, please stop. Um, there are several common variations of these schemes. Again, this is the ones that I just mentioned are the ones that we see that are happen to be the most popular. But again, there are so many different ways of how a criminal can try to get to you. And again, with AI nowadays, it makes it even more challenging for many to try to stay safe. So be very careful. Again, like I stated, there are several common tax season scams patterns to be aware of. Impersonation scams are amongst the most frequent one that we have seen recently. Someone may claim to represent the IRS, a state tax agency, or another government entity. They may threaten penalties, demand immediate payments, or like I said on the previous slide, they can even tell you that if you don't make a payment right now, we're going to send the sheriff's office or the police department and you will be placed under arrest because you owe taxes. Another growing category that involves it involves a fake refund or credit schemes. This often circulate on social media and encourage people to claim credits that they're not actually eligible for. In some cases, dishonest tax preparers charge high upfront fees based on inflated or fraudulent refund claims. Be careful. Be very, very careful. There are also settlement scams that promise to resolve tax debt for pennies on the dollar, often requiring large upfront payments. These scams typically show up through common communication channel, like I stated. They may arrive as an email, text message, phone call, or direct messages on social media. Some they're going to direct you to a fake website that, again, they look official. Unless you are really tech savvy or you know that website because you're very familiar, it will be very hard to flag it as a scam. And again, be very careful. Other things that might happen, they might ask you to complete a fraudulent form to collect personal information, and all they're doing is just stealing your identity. So be very, very careful. Understanding how this type of scams, how they're delivered, is just as important as recognizing the scam itself. So the method often reveals the red flag. So be very, very careful. Um, Now, if you believe that you've been targeted by a scam, you need to act quickly. The first thing that you want to do is report any suspicious activity to the IRS website, which is irs.gov/scams. The IRS provides clear guidance on how to report fraud, identity theft, or impersonating attempts. So if you share personal or financial information, contact your financial institution right away. If your account here at the credit union has been impacted, um, you need to notify us as soon as possible, so that we can keep a close eye on any activity that's happening on your account. Also, place protection on your account or issue new cards if necessary. Again, it is important that the sooner you react, the easier it will be for you to solve, the mess that you might be getting into. Again, very important to act right away. Another thing that you may also want to consider, again, is going to be placing a fraud alert on the three credit bureaus. So Equifax, TransUnion, and Experian. You can reach out to them and place a fraud alert. Also, something that we actually recommend to everyone, and that is to place a freeze on your credit. So have a credit freeze. That could also help you with preventing any long-term damage. Again, as we stated, early detection is going to limit the long-term damage that this can happen, that this can have on yourself. So again, the most important thing is to remember that you need to act quick, because the quicker you are, the more damage you will be able to reduce on the long run. Um, and again, if that's happened to you again, it's okay. I know, like I stated, and we always look at the numbers of people that become victims of this type of scams, and unfortunately, the numbers continues to be on the rise. So you need to be very, very, very careful. And now, as we start to wrap up, let's come back to the big picture. As we stated, the smart tax season moves aren't about chasing a large refund or fearing a balance is due. They're about understanding what your outcome means and responding intentionally. If you receive a refund, the opportunity is not just spending, it's not just about the spending power that you're getting. It's a financial leverage. Keep that in mind. You can reduce debt, strength savings, or invest in your future. One thing you don't want to do is take the money and take the whole family on a vacation and spend it all on that. So again, be very, very wise. Now, if you're on the other side, if you have a balance, the focus is going to shift to minimizing the cost, choosing the right repayment strategy, and planning ahead so that next year feels more predictable. And regardless of your outcome, protecting yourself from scams is essential. Awareness, patience, And verification is going to protect your money as much as budgeting and savings do. And don't forget, the tax season doesn't define your financial health. Your response to it does. So planning ahead, making informed decision, and staying alert are what turns tax season from something stressful into something manageable. Those are the real smart tax season moves that we want to deliver for you this evening. I know this has been a little bit of a short presentation, but one that I will say it is very strong, mainly because the impact that this can have on anyone, especially if you fall and become a victim of a tax scam. So again, my name is Milton, and I'm the membership development officer here for the credit union. I thank you all so much for being with us this evening. And let's see what we have on the chat. Eddie, Andrea, do we have any questions there that we can answer for our members? And remember, like I stated at the beginning, um, we are not tax advisors. So if you do have a specific question related to taxes, we always advise you to reach out to a tax expert, if that is the case. But again, thank you all for being with us this evening.
Thank you so much, Milton, for the presentation. So we have a comment. So every year we had to pay about 1,500, so we had extra 75 every 2 weeks held from my paycheck. Now we don't have to pay so much by April 15th. And I don't know. Hold on.
Yeah, no, I was just going to piggyback to what Mr. Ken was saying there, and that is absolutely right. Like we've been saying during this presentation, creating a plan, it is important, especially, you know, if you're going to be on the other side, which is owing, having a balance. If it's a refund, it's exciting times because you're going to get something in return. But if you know that for a fact you're going to have a balance, saving a little bit every week, every paycheck, however, whatever works for you. And again, one of the advices that I give to anyone is, when we do our family budget at the beginning of the year, we actually create a little bucket there that says taxes. So we start putting a little bit every month, that we know that we're gonna use the money, because comes April 15, the famous 415 is tax season, and we know that you have to send your payments by then. Otherwise, you're going to be facing penalties and interest, and all of that is not pretty, because there's one thing for certain: Uncle Sam will get his money one way or another. So make sure that you do in fact create a plan to cover those things, and be on the lookout for it.
Okay, sorry. Our next question is, should I adjust my withholdings if I get a big refund every year?
That is another excellent question as well too. So whether you're getting a big refund, or you owe and you want to owe less, going into the link, Carrie, do you share the link with everyone for the IRS, which is a great estimator? Go in there and start plugging in the numbers. And if you do want to, adjust, make any adjustments to your withholding, we will always obviously tell you, advise that you go and talk to your HR department, that they can assist you with adjusting and modifying your taxes. But yes, absolutely. I mean, if you want to, the more you withhold, the better you're going to be, on the other end, once the tax forms are going out and being delivered to everyone. So yeah, I mean, it's again, a lot of people actually use that as a strategy to build up their savings. They pay more in taxes during the year so that they know that by the end of the year, they will be receiving a refund. So again, it all depends, but absolutely, Our advice is to use the tools that you have available, and the one from the IRS is one that we will recommend. But again, there are also a lot of them online. That you can use, and it will definitely give you will give you a good idea as to where you fall, and the type of outcome that you might have at the end of the year. So, but yeah, that was an excellent question.
Thank you, Milton. And our next question is, are there any specific tools or accounts members should consider using during tax season?
Absolutely. The more that you can use to take advantage of the tax credits, that's the one thing that we recommend. We talked a little bit about the IRAs accounts. Also, again, we tell you that you consult with a tax advisor, because those accounts, they do have limits as to how much you can contribute every year that you can use for as a deduction on your taxes. So talk to a tax advisor, but if you do want to set up an IRA, reach out to us. We have an amazing IRA department here, that they can assist you and give you the more tips and tools to do so. Also, another thing is, and this is something that I would recommend as well, because I done this myself, and that is to establish a share certificate or a CD account. I'm sorry, for 12 months. I know that that if I said as long as I open the account in by March of the current year, I know that that account will mature by March of next year. Which, if I'm lucky and I was able to get a good interest rate, I'm going to have a little bit of an interest that I will be using, towards paying my taxes at the end of the year. So, looking into an account like that could also be beneficial. And so again, there are different options. I know perhaps putting money into a high yield savings, something that is liquid as well, can play a huge role too. So, but also again, it all depends on your situation. And as we stated at the beginning, it's always good to have those conversations with your tax advisor. So that is definitely one of the best. The first thing that you should do is talk to an advisor, and then they might make recommendations. If they tell you look into an IRA, or probably set up a CD account, come and talk to us. We will definitely take it from there and assist you with the next steps.
Um, so our next question is, will you do a future session on TSP and Roth?
That is a question that I'm gonna defer to Miss Carrie Lazar, because I think I know the answer, but I don't want to steal her thunder. So, Carrie.
Yes, we'll have Michael come on in and tag team it with Madison from the IRA department. Since Michael's really knowledgeable when it comes to TSPs and FERS and all of the federal benefits. So yes, thank you for the suggestion too. We like those.
And our next question is, what do you do in situations when an employer doesn't take federal taxes out of a paycheck?
If for some reason, and again, that's you're not alone if you happen to be in that particular bucket. I've seen where some employers, they don't take any deductions. Our advice is use the calculator, the one that we show you on the link that Carrie shared with everyone. And once you start plugging in all your numbers, it will tell you about how much money you are gonna owe at the end of the year. So by doing that, divide the number by 12, and once you're getting paid, set aside the specific amount of money and put it into a savings account. That way, you're not gonna be surprised with, here you go, this is how much you owe, and you have used all of your money throughout the year and you didn't set any money aside. So again, using the calculator, an estimator, I'm sorry, It's going to give you a good picture, a good idea as to how much money you will be responsible for your federal taxes. And if you happen to be like this individual that asked the question, where the employer doesn't take any federal taxes, then setting aside a percentage is going to be a key for you not to feel a huge chunk that will be due once the taxes, once it's April 15th. So setting aside a small percentage that you can have a better idea by simply going to the estimator could be the key. One of the things that I would personally recommend if you are in that position. Again, you're not alone. I have spoken to several individuals that their employer does not take any money for the federal taxes, and I know it's amazing because your paycheck is bigger. You have a lot more money coming in every paycheck. But guess what happens? And like I told you at the beginning, Uncle Sam will make sure that he gets his fair. I don't know if it's fair, but he will get his cut at the end of the year. So that's all I wanted to say. So, but yeah, excellent question though.
Thank you, Milton. And our next question is, we're in Utah State, and as I found out that our state is taking taxes from SSA. If it'll change, would it be a tax return update and adjusted later? Would the return update be adjusted later? Thanks.
Yeah, that's another great question because I know, especially with the big beautiful bill that went in for this year. I know there were a lot of changes that were made. But again, I would say that's more of a technical question that you probably want to ask your tax advisor. And that's the other thing too. Every state is different. I live in Virginia. And taxes here for me, it's a little higher than if I was to compare to someone that lives in Maryland. And so going into the website, it could be something that I would recommend. But most important, for this particular case, I will say to consult with a tax advisor just because it's a little more unique, especially with the changes that have been happening lately around the big beautiful bill that went in place. So that would be my advice. Consult with a tax advisor on that one because that's a more delicate question that you will definitely want to ask with a professional tax advisor. But yeah, that was a great question though.
And I believe those are all our questions.
Milton, so if that's all the questions, right, Andrea? Because I don't want to interrupt the questions.
Yeah, I think those are all the questions.
I should have put in the slideshow, but we do offer a discount if you haven't filed your taxes yet through our Love My Credit Union rewards program. There's discounts for members. I think it's 10 to 20% on TurboTax and then like $15 off of H&R Block tax prep services. So I'll throw the link in the chat if you haven't filed yet and you're interested. You could save a little money that way. There it is.
Yeah. And don't forget, like I said, another thing that I would say, and thanks for sharing that Carrie, because again, those are just some of the benefits that you get by being a member of the credit union. Also, April 15 is the deadline to file your taxes, but that only it's going to be for the individuals that most likely will have a balance. If you don't have a balance, you're okay. But my advice, if you do have a balance, is to try to pay it off as soon as you can. Don't wait until the end. Oftentimes, there could be a delay in the mail if you're sending your payment in the mail. Also, if you do electronically, it could take a couple of days for the transaction to go through. So again, I guess that would be my final advice to anyone, especially if you do have a balance, is to don't wait until April 15. Trying to take care of your taxes as soon as you can. And again, if your bill is a lot. you can always ask for an extension. That is also something else that you can do, and perhaps will be worth to go into directly into the IRS website, or if you owe taxes to the state, going to the state website in the tax revenue department and see what options that they may have available. But again, this has been a great webinar. But don't forget also the importance of the scams, which a lot of people might take for granted. But trust me, it wasn't last year, but it was the year before. I felt bad for a member here of the credit union because she fell for the tactic that they used on her. Somebody called her and told her that they were that if she didn't make her payments, that they were going to be sending the sheriff department with a warrant to be arrested because she had a balance on her taxes. And she was, the moment that she heard a warrant for her arrest, that the police department or the sheriff's office was going to be deployed, she went into panic mode and provided them with with their financial institution information. um Luckily we were able to stop some of the damage, but the damage was done, but it wasn't as much. But again, um be on the lookout. Stuff like that happens, and then one will think that I'm always on top of that. It will never happen to me. But trust me, oftentimes it just takes one small second that you're a little vulnerable, and then they can get you on that specific time, and then you might fall a victim. But again, be very, very careful. Do not become another number to the stats.
And as Milton was mentioning, there's a lot of tactics that these scammers are using. So, Kerry, why don't you talk about next Wednesday? We're gonna go in a deep dive into one of those scams, correct? What is it?
Romance scams. So
All right, you heard it from Kerry. Roman
pig
scams.
butchering, which is crazy word. Dating scams, all that stuff. Like normally we'll talk about cover scam types all in one presentation, but we're really gonna dig deep into the this one. So
You heard the expert. We're gonna go into those, strategies that scammers are using when it comes to romance. Sometimes people might feel lonely, they might want some, attention, and unfortunately, scammers take advantage of that. So please join us next, Wednesday at 6, p.m. Eastern time, to learn a little bit more about this. As Milton was saying, don't ever put your guard down saying that's not gonna happen to me. I will never click on that. I will never call this person, a scammer. But you just never know how, strategic these scammers can be. So join us next week. We're gonna look into all those details. There's so many approaches that they're doing. So if somebody really loves you, they're not gonna ask you for money. So please, please make sure that you join and you are part of this amazing webinar. And with that, I want to thank Milton for, the great presentation. Thank you, Kerry, for the amazing content. Thank you, Andrea, for your support with the introductions and the questions. And you heard it from Milton, just because somebody's going through a certain tax situation, or they're approaching their taxes a certain way, it doesn't mean that you have to do that. Talk to the experts. We have, Michael from Fellows that can help you with those tax advices if you would like. That's the reason why that, membership with the United States Senate Federal Credit Union. You heard it last week. You gotta love that membership because it comes with so many perks, comes so many benefits. And the best part is that we will do whatever is best for our members' interest, whatever is beneficial for them. If they perhaps want to do a certain type of service, but there's something better for them, we will do the best recommendation for them so they can reach their financial goals and dreams. Thank you so much, everybody, for being here. We'll see you next week at 6 p.m. Eastern Time, like I said, with deep dive into romance scams. Tell your friends, tell your family, share the links. Please, support us. Your support means a lot to us, the attendees. Without you, this wouldn't be possible. And also check our social medias. We're on Facebook, we're on Instagram, we're on TikTok, we're everywhere. So check our videos. We got podcasts, we got previous recorded webinars, and the best part is that you, as the United States Senate Federal Credit Union member, you're valuable, and we listen to you. Thank you so much. Hope everybody has a great Valentine's Day. And if you have that special person, take them out. And if you don't have nobody, take yourself out. You deserve it because you are unique and awesome. Thank you, everybody. Good night, everybody. Take care.